regional bank PacWest is down 57%, and they predict that it's going to fail next.
If that's happening in the banks, it's happening in the stock market. This is about controlling your money. There's valid ways of not paying taxes and making a lot of money. Congress has been taking advantage of this rule for decades. They've been investing in their own businesses, their own different real estate deals, using the retirement funds and not paying taxes. People in their 9-to-5 jobs that are making $55,000, the last thing to think about is savings and or retirement account. But it's your money. Take control of your funds, invest in what you want.
This Wealthy Wednesday is going to be a lot of fun, guys. We have, Greg in to talk about self-directed IRAs.
We started the first half an hour talking about kind of the crazy worldly stuff that's going on that we have no control over. And that's why I'm so passionate about what we do is we teach and show people how to use the retirement funds. So if you have an IRA, an old 401k, so like your current 401k where you're employed, we were just talking about it, you couldn't use that, but you have an IRA or a Roth IRA. If you have a retirement account and you're sick of or don't trust the banks, the stock markets, the crypto, whatever it is that you're investing in currently and you don't like with your financial advisor, you have the option to invest in something that you know and understand. So that's what we do. It's what I'm passionate about. I love it because I feel like it's taking control of the money. And we just talked about everyone else taking control of money and there being uncertainty in the market. Right now, like with this comments that came out that you just talked about, your IRA today, if it's your financial advisor, probably dropped 1%, 2%, 3%, 4% just today because someone said something, or because Elon Musk, woke up and said he had, another kid today, or whatever the case is. Like it just changes based upon there's so many unknowns and variables. And so my quick spiel is we help people use the retirement funds to invest in what they know and understand. And it's called self-directed. So you can have a self-directed Roth, traditional SEP, simple, self-directed 401k. A lot of people from WealthCon opened up self-directed 401ks. So it allows them to contribute a lot more money and then also make tax-free gains. And so that's the other thing I was going to say is, I think one of the listeners said something about, there's valid ways of not paying taxes and making a lot of money. And that's the whole point is like, these are rules. This rule, by the way, I'm talking about has been created since the 70s. And no, it's not probably surprising, but the Congress has been taking advantage of this rule for decades. They've been investing in their own businesses, their own different real estate deals, using the retirement funds and not paying taxes.
Yeah.
And so JP Morgan doesn't want you to do this. Your financial advisor doesn't want you to self-direct your funds because then they don't get their fee. And so this is a method for those that want to take control of some or all of their IRA. That's the other thing is some people think, oh, I like this, but I'm a little bit afraid and I don't want to move my whole Roth. My wife doesn't want me to, let's say, right, Shane? And so you're like, well, how about we just move half of our Roth over to a self-directed, invest in the Pinata fund? You could do that. And then let the other half go and let your financial advisor see if he can beat you. Yeah. And so anyway, so that's what we focus on and we've been doing it for 13, 14 years.
Yeah. So why, I understand the concept of self-directed. I think everyone should be in control of their funds, right? Why would you choose like a self-directed 401k versus like an IRA?
So the two biggest reasons would be because you want to contribute more money than your traditional, because the traditional and Roth, there's limitations on how much you can put in.
What are the limits?
The traditional and Roth just went up. I think it's $6,000, and someone can correct me, $6,000 or $7,000 now, $6,000 and $7,000. $7,500, $6,500. It changes every year. But in the 401k, what's I think great about that is you can contribute almost up to $62,000 between you and your business. And so if your business, it's your business, you're the employer, and you W-2 yourself, you can contribute a lot more money. So that's one advantage of a 401k. The second advantage of a 401k is you can borrow money for anything, to pay off your credit card expenses or vacation or whatever you want, or for literally anything. It's a loan to yourself. Right. And so that's powerful.
I just did that.
Yeah, that's powerful. It's a lot of people are doing it. I think the most people in their 9-to-5 jobs that are making $55,000 we talked about, they pay everything else first, and then the last thing to think about is savings and or retirement account. But what I've seen with a lot of investors and clients, if you can figure out how to pay yourself for something, you'll figure out how to pay your utility bills and your mortgage. But if not, if you pay your retirement last, you'll never set up a retirement account. And then the average retirement account for a 50-year-old, in their IRA or 401k is like $50,000 to $60,000. And it's so far below what anyone should be at, in preparation for retirement.
Yeah. So what would you say for a high income earner? Like, 50,000 is nothing. So like, how does someone like me start contributing a lot of money?
So there's something besides a 401k called a defined benefit plan. And so you can set up that as well, where you're putting away literally potentially hundreds of thousands of dollars per year.
Okay.
And you can do that as well. And so I would say, our average client is doing if they're starting from scratch, they're doing the 401k, so they can contribute. But there's a lot of people that have I'd say 80% of our clients already have an old 401k. They don't even know what the value is of it. They don't know what it's invested in. And so I'd say 80% of our clients are moving that or their old IRA over to us, and they're starting with that, and then they're making contributions. But if you're looking to put away more money, you can do that through defined benefit plans.
Yeah. So the defined benefit plan, like, let's just say I wanted to go put $200,000 into it. How would it work?
So it's complicated. At least in general, it's an equation based upon how many employees you have, and how much they can also contribute to their 401k, and there's a percentage that you'll contribute. So a lot of these defined benefit plans, the reason why owners like them is, let's say you want to put 200,000 into it. Well, then you'll have to fund 30 to maybe, and I'm just throwing out an example, don't hold me to this, $30,000 to $50,000 per year that will go towards your clients' accounts that go into their retirement accounts. But by doing so, it allows you to put up $200,000 into your personal account. And that's super powerful tax savings, tax growth. It's a good way. If you're making lots of money and can put away a lot more money, that's definitely a way to do it.
Okay.
But again, I'd say 90% of America that are self-directing, not of America, 90% that are self-directing are doing the traditional between 5, 10,000 or 50,000 a year, which by the way is probably 100% more than they're doing right now.
Yeah.
Well, and with that method, so say you do want to self-direct your own IRA. I'm a W-2 guy. I have been, and I've got an IRA, a Roth. And if I wanted to take those funds and realize them in the form of cash that I could put toward a down payment on an investment or pay off credit card debt, anything, what are the logistics of that?
So, well, first you can't pay off credit card with your
IRA.
IRA.
Okay. Cool. Good to know.
No, it's good. But so if you have let's say, where's your Roth account?
It's called Empower.
Okay,
now.
So of course it's called Empower.
Yeah.
We empower you to give your money to us.
Nothing but empower. That's good.
We're
All right,
empowering you to
so
steal
basically you fill out an application with a company like ours. We're a custodian, and we help you do that. And basically once you fill it out, we fill out the Empower information saying, Shane would like to move over some or all of his Roth account to Horizon Trust. So we send that to him. You'll liquidate, let's say you're all in stock, whatever you're invested in, you'll liquidate all or a portion thereof into cash. And we help do all that. And when we call over to Empower, I never have heard of Empower. So
yeah, it's Chicago too.
Okay, all right.
Yeah.
So then Empower would receive our documentation requesting the funds to be sent over. And so then it'll be sent over to Horizon, and then your money will sit. That process takes you about a half an hour with my team and takes our team a couple hours. And then in total, it'll take about 10 days for your money to arrive. So not too hard on you. It's a little bit of paperwork, arrives to us, and now it's sitting in cash at Horizon Trust. And when it sits at our trust company, it's literally just in cash until you say, I want to, do this deal, buy this rental property, wholesale a deal. And that's the other thing is a lot of people that say, I have too small of an account to do this. If you wholesale 1 or 2 deals a year and you have a $5,000 Roth, you can turn that $5,000 Roth into $50,000, $80,000. A couple of our clients have done this last year. We've been watching, and so it's very easy. We walk you through the process.
Cool.
Yeah, I need to get back to doing that, and we'll have a chat after. But I had a self-directed IRA. I started back in like maybe 2017, 2018. And it's funny because like I did 50K or whatever the max was in year 1. Then I did another 50K in year 2. And so now I had enough, like, because in real estate with the self-directed, you can't get leverage. You can't get a mortgage. You had to buy it all cash. And so I was like, all right, well, $100,000, I'll go buy a mobile home. So I flipped a mobile home, and, I built it to like 150, and then COVID hit, and I saw stocks were just so cheap.
Yeah.
And I'm not even a stock guy, but I was like, I'm just buying stocks.
Yeah.
So I bought a ton of Tesla in 2020, like in March, when everything was at literally rock bottom. And then the 150 turned into like 300. And I was like, maybe I'm gonna have to start a stock
genius.
trading course. I just know stocks so well. But so then my IRA just kept getting bigger and bigger. And then I ended up investing it into my fund for our apartment deals. But yeah, I haven't contributed to it since then. Like, I just was always like, whatever, it's 50,000. Like, it's not gonna change my life. Hey, if you're looking to grow your real estate investing business, whether you're just getting started trying to get your first deal, or you're trying to scale and get to the next level, you need to join us at Wealthy Investor. We've got events every single quarter that are absolutely crazy. We've got online coaching programs where we have Zoom calls, a community every single week. We give you everything you need to know to start your business, scripts, processes, SOPs, all of it. It's for you so that you can dominate. So if you want to learn more about how to join our community and be mentored by me and some of our top coaches and be around other students who are absolutely crushing it, go to wealthyinvestor.com, apply for a free call with my team. Once again, wealthyinvestor.com, apply for a call today. To your point, what's interesting is now that I understand what these people do, a lot of them do just wholesale with it. And so like one thing that is crossing my mind is that, with Home Run Offer, I don't need to live off my flipping income anymore. Like I have other income that's good. So like maybe I should just run that whole business in my retirement account and wholesale and build that thing up to like millions. What do you think?
Yeah, well, there are some rules. The quick answer is yes, you can do it. The longer answer is you've got to make sure that someone else is, and I assume you have a team that's managing it and doing it, and you're more the investor on it.
Yeah.
And you're not taking any other kind of fees or commissions or anything like that. As long as you're doing that, you're most likely going to clear it. Other thing I was going to mention though is you actually can now borrow money. Your IRA can borrow non-recourse money. So that's changed, and we actually have banks that work with our company or with our trust company that'll lend up to 50 to 60% of the acquisition. So that'll allow someone to buy a $200,000 rental property for $100,000 in their IRA. So that's pretty
new.
cool.
Yeah,
and their rates I think are 9 or 10%, but it's non-recourse, interest only from a bank. And so a lot of times it still will pencil. And in fact, 9% is not probably.
Well, and if you have only 50% leverage, you're going to cash flow, or if you flip it, you'll be good.
But yeah, you can do what you said. I mean, if the three of us, if someone came to us and said, hey, look, we want you to be our angel funding, we want you to put up the money, the three of us could all put up our Roth IRAs and each own 30% of it, have them manage it, and we get passive returns, and we'd pay nothing in taxes.
Yeah.
So what is the cost of this strategy? So I look at like a HELOC, right? We've got a home equity line on our house, and we could use, I think it's like $200K at 8.9% interest wherever we want as cash. So if you take your self-directed IRA and you want to use that money with a company that's going to manage all of that for you, what is the end result in terms of interest or your average deal? How much of the deal is your customer actually taking
that's
home?
all your decision. That is one thing about our custodian companies. We don't tell you we don't give you options. We don't tell you where to invest. Most of our clients and customers come from scenarios like this, where they're like, hey, look, I met you at Ryan's.
Why are you saying you need to invest in Pineda Capital?
You don't. Well, most people are saying, hey, I have my IRA and I want to invest in Pineda Capital, so help me do that. And so we help you do that. But we're not the ones that say, hey, look, here's the opportunity, here's the interest rate, et cetera. But I would say, on average, because 75% of our clients are real estate invested, they're not losing money, for the most part. Now, of course, there's losses. You can make a bad decision and invest in the wrong real estate deal, or you could lend your money to a person, and if they don't pay you back, you could lose your money.
Of course, of course.
There's those risks as well, but look, in general, there's, we just have our trust company has an annual cost. It's less than 1% per year.
Cool.
And so, it's 1% if it's 40,000 or less, but everything above 40,000 just it's less and less.
Diminishes off. Yeah. Okay.
And so
that's what I was looking for.
Yeah. So most of our clients, if you're at Empower, in most places, you're thinking you're only paying 1% or 2%. Most likely you're paying 2 or 3 or 4%. You just don't know it. There's mutual funds. There's loads of fees. There's lots of fees. So you pay less than 1%. You get to put it where you want. Put it in a fund. Put it your own deals. And look, if you're looking to take control and get started, it's the right way of doing it.
100%.
So
I have a question for Greg.
Yeah.
So for example, for me, I just took out a loan against my 401k because I was like, I need to get some money out to use it for other stuff, right? So I took out $22,000 or something like that. Now, is there typically a minimum that makes sense for people to get involved with you? Because not everybody has $50,000 or $100,000.
Yeah.
So, what would you advise somebody like, hey, come with at least 10, 20?
Yeah, I would say if you think you're just going to start like with wholesaling, then I think you could come with like $5,000 or $6,000. Look, our average account size is $85,000, and I would say, 20% of our accounts that open up will open up with 25,000 or less, and then the rest are above that. So you can, if it's going to be 1,000 or 2, I'd say hold off. But if you can get going with at least the $5,000 or $6,000 to start, it's great. And look, half of America in the last 5 years have lost or changed jobs. And so I think another important stat is there's 96 million IRAs in the United States. That equal over $11 trillion. So there's probably between 30 and 50% of people that are listening to this have an old 401k, don't know what it's doing, aren't happy with it, maybe are investing with it because their brother-in-law is a financial advisor and they don't want to like go to Thanksgiving dinner and like have moved their account from them. It's your money. Take control of your funds, invest in what you want. And so there's the long answer to your question is $5,000 or $6,000 I'd say is the minimum. But if you have an old 401k, don't not do this because you think it's too small.
Yeah, I agree. I'm really now thinking about doing retirement better. There's the famous story about Peter Thiel. What does he have? Roth?
Yeah, his $5,000 Roth.
What's the story? It's worth billions now.
Yeah, it's worth billions. So he
Wow.
he was one of the founding partners of PayPal. Right?
Yep.
So $5,000 in with his Roth, doing what we just talked about, like that example of a business. Well, then when he sold it for a few $100 million, you can Google it. I don't know which company did next, but it was like, Uber or something like that. So his $5,000 now I think is 2-point-something billion.
Wow.
And so last fall, about 18 months ago, Congress, of course, wanted a piece of that. So they changed the rules. And so now because of him, is what everyone says at least, and I believe it because he's done so well taking advantage of these rules, is you can now only make up to $10 million per year in your account.
Can't make $1 billion.
You can't make, you have to do it the hard way.
No billion.
So no billion. So $10 million. But look, that's enough space for I think
I wouldn't complain about that.
So,
yeah, I mean, for us peasants,
yes.
Yeah.
we should be fine. If I have the problem of I can't do it,
it's a good problem.
Yeah, I'm like, all right, whatever. I'll figure out some other way.
So when you move your money from your Roth IRA into Horizon Trusts, for instance, it avoids taxation completely, right?
Yeah,
and any penalty,
no taxes.
no penalty, no taxes. It's just like if you transferred it to another IRA or something like
That's
that.
Right.
And it's literally called a self-directed IRA. That's the name for it.
Well,
for
it's
the program.
not a particular type. Self-directed is a description for the type of IRA.
Moniker.
So you'll still have a simple SEP or Roth IRA with us or traditional.
Gotcha.
It's just a self-directed simple SEP or Roth.
I see.
And so that's it. It's not technically a type of IRA.
I'm curious as to why more investment companies don't offer a self-directed IRA themselves. Like, why wouldn't Fidelity offer that themselves?
Regulation and risk, and they don't want liability. I mean, because there is liability to them because they are fiduciaries. We are not. We're not fiduciaries. So we don't make decisions on what you invested, and we're not going to give you any recommendations. So therefore, if you were to invest to the wrong person and they take all your money, at Fidelity, they'll get in trouble for that.
They're going to get sued.
Yeah.
Right.
Here, it's gone.
Yep, it's
You
my
made
choice.
a bad decision.
Made a bad call. Yeah.
Yeah.
It wasn't PayPal.
And so they don't want that risk. They don't want that risk at all.
That makes sense.
So there's pros and cons, right? Because this is not for everybody. Let's be clear. When we talk about self-directing, there's only 4% of Americans do this. And the other 96%, probably only another 4 or 5% should be doing this. Typically, it's entrepreneurs, people that are active, that understand what they're investing in. Most people are 9 to 5 and then do not look again at any of their investments. This is not for them.
Right.
Yeah.
You don't need to go buy a truck with your self-directed IRA.
That's right.
Well, you might.
Somebody,
Unless you're going to use it to haul.
I read a quote today that said, wealth is what's left when your cash is gone. And this kind of like speaks to that, right? Like all of what you guys are talking about with, putting your money into all these different places and investing, and you're only wealthy when you stop looking at your cash, right? And you look at like all of your other assets.
Yeah.
I love that.
So
that's good.
speaking of the banks, so 2 hours ago, the Fed said that banking system is strong. Yet in after hours trading, regional bank PacWest is down 57%.
Ugh.
And they predict that it's going to fail next.
Ugh. But this is like the perfect example why we're talking about even self-directing. I mean, if that's happening in the banks, it's happening in the stock market.
Yeah.
And so this is about controlling your money, being your own bank, using the money in what you want to be doing.